Hello, good students. As you know, my name is Micah Crump and I'm an entrepreneurship professor. And so, in teaching college students to help them develop, to become more enriched, there are different types of skills that we do that. So, in the classroom, we do what's called hard skills. Those are the technical skills that you learn in all of your different classrooms. Most of them are written in your student learning outcomes, you perform them, you assess on them, and everything is all good. But also throughout your degree program and also across the broader campus, we're collectively trying to help demonstrate or help you develop additional skills, and we call those soft skills. Those are a little bit more abstract, a little bit more blurry, they're kind of harder to assess, but the world knows whether you have it or not, and it really matters. One of those particular soft skills, we're going to go on a deep dive. But first, examples of soft skills are like teamwork, collaboration, time management, leadership, adaptability, creativity, and innovation. And there are many soft skills that you have to develop on, and we're working very hard to get you across that finish line. So sometimes we have to battle a little bit. One of those particular soft skills is communication. And in 2024, how you communicate different types of communication messages to different types of audiences through different types of communication channels, it matters. And so we're going to show you one. But one thing I want to emphasize is once you study, once you put in your work, that knowledge is inside of you and you have to trust it. If you're telling yourself that you cannot convey that knowledge unless you're reading a script, then you're really tricking yourself, because the truth of the matter is you don't need the written script. Now, sometimes for really important messages, you may need to read a written script, but for many messages, you don't. And then we're going to do an example of one where you do not. And that's like, for example, giving a presentation in an entrepreneurial context. All right, so I'm going to make a mock presentation right now, and I'm just going to go ahead and present through it from start to finish using no notes. I have no notes in front of me. I have no script. I have no notes plastered on the walls or ceilings or anything like that. I'm just going to free flow it. And then when I'm finished free flowing using some types of apps such as Clipchamp or YouTube Editor or YouTube Video Create, then I'm going to go ahead and plaster images over there to help make the message more effective. And so I want you to see that. Also associated with this particular video is an additional video that shows how to do the same thing using Canva slides, but you'll decide which one you like better, which is better for you, or maybe you'll even identify even third option that's much better. All right, so let's go ahead and do this, and y'all have a little bit of grace with me because again, this is very fictitious, it's mock, but we're gonna go ahead and get through it. Okay, so here we go. So first thing I'm gonna do is I'm gonna slide my screen now over so that I can make space for my visuals that I'm gonna add in later. So I'm gonna present for you off from right here. All right, here we go. Hey everybody, my name is Jake Witherspoon III, and I am the Hello everybody, my name is Jake Witherspoon III, and I'm the leading co-founder of a new business called Labs Are Us. We do formulation and chemistry testing for businesses so that you can focus, so that our customers can focus on what they do best. Today, I actually want to share a feasibility analysis that we performed on this particular business idea. And so we looked at 4 areas of feasibility. We looked at the product service, we looked at the organization, we also looked at the industry. Is it the right time for us to enter into this industry? And then we looked at financial feasibility. Does it make sense, or should we just shut this business down and go get a real job? All right, so product service, that's the first one that we looked at. And what we did is using business model canvas and lean launch methodology, we actually engaged in conversations and we identified and validated 2 different customer segment groups. And the first customer segment group, they're our users, they're consumers, and then the other second group, that's advertisers. So for the first group, we developed a minimum viable product. But first, we did concept testing, and then we did virtual usability testing, and then we created a minimum viable product, and we had them test it. They said, "No, we don't like that part of the feature. We don't like that feature. We want you to change it this way." And then we kept going back, and after a while, we went ahead through rapid prototyping services, and we generated a real prototype. And then we submitted that to them for beta testing, and we have extremely promising results that say all roads are green light go. So we're good on the feasibility in terms of the product that we're offering referring to that first customer segment group. The second segment group was advertisers, and they said the same thing. It's like, we're good to go. We like what you're doing. We like that you're giving us access to that particular type of audience, because it's been hard to reach them, and so we're all good. So our product, service feasibility, green light, go. The second one is the industry and the market. Is it the right time to enter in this industry? Now, historically, traditionally, it's been very hard for new businesses to crack through and get inside of that industry. They have erected the industry, the group of businesses in that industry have erected huge barriers to entry, from regulation to huge capital requirements that make it almost unrealistic for a new firm to enter in. However, recently, two events happened. Number one, the Roy Jones Act. The Roy Jones Act allowed for a new business like ours to go ahead and enter into that industry. The other thing that happened is technology improvements. The technology improvement of number one and number two made it where a business like ours can finally enter into that industry and compete with some of the incumbents, the big boys and the big girls in that industry. And so we aim to do that. So once that opened up, that created that opportunity. The second area of feasibility analysis that we looked at was organizational feasibility. So from an organizational feasibility standpoint, we needed to know, do we have the management prowess? Do we have the capability to enter in? And the answer was yes. So collectively, when we add up all of the years of industry experience across our team of founders, we actually represent 30 years of industry experience in this particular business. Credentially wise, 3 of us have a business degree, 1 of us has an MBA, and 1 of us has an advanced terminal degree in chemistry and formulation and testing, as well as this particular founder was also a senior research analyst at Brookhaven National Labs in New York City. All right, so we definitely had the management prowess. Something else is that we represent 3 different startups together. And so one of our startups, we actually had an exit strategy of finding a buyer who purchased our business. And so we're doing pretty good. And we have the entrepreneurial education industry experience to go ahead and be a green light go. The other thing is, in order to get in this industry, in terms of non-financial resources, you definitely need a license. And so we definitely have a provisional license to do formulation and testing, and in a few years that'll convert to a regular license as well. We also have identified, we have secured 3 different patents, one on technology, one on software, one on a gadget, and then also we also have a patent pending on our particular stethoscope, which is a major part of our business model. And then the last thing is, in this industry, to start a lab like we're doing generally costs millions and millions, tens of millions of dollars. And so through our industry context, we actually have access to a lab, and we also have access to a team of scientists that are doing big things, winning awards. And so we get to go when it comes to organizational feasibility. In terms of financial feasibility analysis, yeah, we're green light go, and I'm gonna walk you through individual right now on what that means. So first of all, in terms of our sources and uses of funds, well, we've identified that it costs dollars to actually launch this business. That's the total dollar amount that's actually required, is that amount. Now, out of that, our management team investment, the skin in the game that we brought to the table, is this amount of dollars. We also raised some money through business plan competitions where we were awarded various prizes, and collectively that added up to that. And then finally, we did a crowdfunding campaign. So together, that means that we have this amount totally committed. And since that's less than what's totally required, the difference is what we're seeking today from an angel investment standpoint in exchange for blank percentage of our company, which corresponds to what we're asking for. All right. So also our income statement. Our income statement shows steady and rapid projected revenues over the next 5 years. And so, and that's associated with, by year 5, equaling $1.295 million, which also corresponds to an expense level by year 5 of this particular dollar amount. And then when we do the subtraction, we actually generate a profit projected of blank by year 5. So we're looking good in that particular area. Our balance sheet shows that by year 5, we will be controlling X dollars amount of assets. And those assets, we're looking pretty good because we're only going to be moderately leveraged. So our total liability on those assets represents blank percentage, let's say 25%, which means that our total owner equity is 75% of the assets. So our balance sheet is balanced across all 5 years, and we're looking good to go. Finally, the cash flow statement. We began this business with $225,000 cash that we raised on our own and with the equity funder. And then we project to be cash positive. If you notice, in year 2 and year 3, we identified that we had a major cash shortfall. And so therefore we came up with a strategy of owner investment, infusing cash into the business, and that carried us through. So for the next 5 years, we intend on being cash positive. So essentially, all of this is looking good. But the last thing I want to do is share with you some ratio analysis. So our ratio analysis show that, for example, our gross profit margin is almost 50%. And so what that means is that out of our total revenue, once we subtract the cost of goods sold, which is the direct materials and labor costs, then we're actually able to hang on to 40, almost 50% of our total revenues. Now, when we go all the way down to the bottom and subtract out all of the additional expenses, by year 5, we're looking at a net profit margin of nearly 10%. And so what that means is out of all of the revenues that we collect, we're actually able to hang on to 10% as profit. And then when you look at our return on assets, our return on assets shows that out of all of the assets that we own, we're actually able to generate a profit by year 5 of blank percentage of those assets. And so you can look at the additional ROEs. I'm going to walk you through each one right now. So this one means that one means that one means that, and so forth. So just really wanted to share with you that we're green light go. This business is feasible. So everything tells us, every indicator is that we definitely should continue to proceed with this business. So thank you all for listening. And remember, labs are us. We do the testing and formulation so that you and your business can do all of the other things that are important to you and your customers. Thank you.